Hi, it is Sunday, October 7th, 2018. Taking a look at the S&P 500 as we start October week 2 and the second week of Q4 2018. Okay, so I think we all came into the quarter expecting our yearly Q4 performance chase and run for the money. And things started out great. Here's our week in review. 1, 2, 3, 4, 5. Here's Monday, Tuesday, Wednesday, Thursday, Friday on the S&P 500. And this is the roadmap chart that I show you every day. And this is my personal set of notes for anything and everything that has been going on with the S&P 500. So we had, we tried holding ourselves above the 10-day simple moving average to start the week. Sellers could not break us down below the 10-day. Buyers, though, could not commit above 29.40. Our high for the week was 29.39.86. So we made about a 1 point lower high than our all-time high. And then some Fed speak started to make the rounds. This arrow here marks the FOMC that we had the week before. And then on Wednesday, 1 week later, after the market closed, there was a whole bunch of Fed speakers going on, including Jerome Powell, and he made a comment to the fact that if the Fed needs to overshoot to keep inflation under control, it will. And I think that, a lot of people are saying that that is what really spooked the market coming into Thursday. So we gapped down open, immediately lost the 10-day simple moving average, and we broke down through the 20-day simple moving average. And then, we came down to a low around 28.83, which was a lower low than our last sell-off back here a month ago on 9/17. Our last, first off, we broke down through this, which was really our last sell-off, which was on the Fed, the FOMC day. But the one before that was back here on the 17th of September, and we broke down below that low, and we rallied back, around halfway back on the day, closing pretty much right on our halfway back for the day. But unfortunately, we closed below both the 10 and the 20-day simple moving average, and then we followed through with that selling on Friday by opening after non-farm payrolls. I got to put an arrow on this candle here. That's what these arrows are for. They mark either the non-farm payroll, Fed day, or Fed minutes releases. And anyway, we followed through on the selling and the weakness of Thursday, and our low of day pushed down through the 50-day simple moving average, pushed down through the center of the rising channel we're in, and intermingled with these lows that were set back here around September 7th through September 11th. Okay, so this was a big rally day, and made this classic outside bullish reversal day. You can see we came in and we made a much lower low than the day before. We came back, we rallied back above the previous day's high. We came back and pushed through the 10-day simple moving average and came down, and even though we closed below the 10-day simple moving average that day, we closed above the previous day's high, and so therefore we got follow through and we got, a nice little rally, and even though it was back tested a little bit, it did take us up eventually to a new all-time high. So in any case, Friday we were intermingling once again into these levels, and you can see that our close was inside the range of this day's candle back here. So if there was anything involved with why the market turned, where it happened to turn on Friday, it might have something to do with people that made commitments, and are getting, sold at these highs and want to get back in at the same place they got in back here. So that could have something to do with it. It could just have to do with the fact that we, poked through the center line of the channel, and we poked through the 50-day, and this 2870 mark, which also is where the January all-time high, the original high for 2018 that stood all the way until we took it out here on August 24th. It took us till August 24th to take out that high. That as well intermingles with the range of where we held the low on Friday as well. So that could be the excuse for why we got bought. But what is really important though is that we put in 2 closes in a row below the 20-day simple moving average. We have a 10-day that's ready to cross down through the 20-day simple moving average as well. Okay, this is the roadmap chart with all the price levels and arrows and text notes removed. And you're just looking at the channel, the simple moving averages, and then these purple stripes which mark off the gaps. And as we rise up or fall through, we look for these gaps to fill, and once they fill, I delete them away. And right now, we've left a gap above us, back to Wednesday's close, and we still have a gap to fill below us that we did not take care of on Friday. That would take care of this gap that was left here at August 23rd. And below that, we have another gap that would take care of we could take care of filling up, that takes us all the way back to mid-August, to this important back test low that we made in August. So as far as trading gaps are concerned, if you are bullish, we need to come in, take out the 20 and the 10-day simple moving average, fill this gap, and close above it. I think that if all we do is fill this gap and then come back down and close back below the 10 and the 20-day simple moving averages, that's bearish. That should be your opportunity to get into puts, not your opportunity to buy a dip. I think that this is really telling us something, the way that the 10-day is curling over and about to cross down through the 20-day. If we don't have a good strong rally on Monday that is followed through to the upside on Tuesday, this thing's going to cross down through the 20-day, and you can see, this last time that we threatened to do a cross here, it was fended off, and we did have our all-time high, our current all-time high print in the rally that that came after this cross, almost occurred and was fended off, was treated as oversold. But I want to take you to one more chart here. Now this is the chart without those gaps, backed out a little further, and just focus on what's going on here with the 10 and the 20-day. So we fended off the cross here. We fended off another potential cross here in August. But back here at the end of Q2 and the start of Q3, they let a cross go through. And this was the last time that we put in more than one close below the 20-day simple moving average. You can see here, no closes below, one single close below here, no closes below here. But here we had 1, 2, 3, 4, 5, 6, 7, 8 closes below the 10 and 20-day simple moving averages. We had a bear cross that was allowed to go through, and price intermingled and chopped back and forth between the 50 and the 100-day. And the pattern here was that there were no 2 closes in a row below the 50-day. And this went on for days and days. We had eight days of sort of sideways chop back and forth in this range, and then finally the buy program kicked in. And this was a really nice, strong buy program that lasted for quite a while and took us to multiple new all-time highs. 1, 2, 3, 4 new all-time highs. So this is not a bad thing to come down here and wash out the weak hands and revisit the 50-day simple moving average to see, and get more committed buyers who who feel that they've gotten a good deal and are going to stick with it and push us to these new all-time highs. Okay, so if that's going to happen here with us, you can see that gap that I talked about that intermingles also as well with this trend line here that sort of was set here with these August lows, all that getting filled here. Bring that chart back up one more time. All that getting filled here coincides with this gap, the 100-day, this trend line, and then this big gap to August 15th. That's where I think we're going to go. We might come in on Monday and have a little bit of a head fake rally, just because it's thin volume and it's a great chance to sucker people in and get them to stay long overnight Monday, and then come in on Tuesday when people are back from the Columbus Day holiday, and get all bared up again and push us down. So I just want to I just wanted to do this video and call your attention to those pitfalls. Unless we fill this gap up above and put in a couple of closes in a row back above the 20-day simple moving average, we're not out of the woods yet. I think that it's best to focus on what's going on down here. We know very well what needs to happen on the upside because we've been in rally mode for quite some time, but we haven't really been in sell-off mode in a while. Hasn't been since this end of Q2, beginning of Q3, um, sort of sell-off that happened. And I think that we're a lot more similar to what's going on here than what has happened to us in these these little head fake dips that we saw throughout August and September. So anyway, I hope that that helps and makes it clear. Me personally, I'm positioned for further downside. I have short call spreads with very little risk that are sort of poised on the fact that I think that we're going to stay close below 28.90. And then I have lower end 28, 25 puts that I sold a call strike, a couple call strikes behind that just to finance those out in case we do open up and rally a little bit on Monday. I can take off that short and then have my long call to the downside. But I have long put spreads and short call spreads, so I'm bearishly positioned all the way around. But I just want to call your attention to possible further downside all the way down here to the lower half of the 2800 handle to test this trend line, the 100-day, and fill this gap in once and for all. And that I think it's going to be fueled by a bear cross. And I think the event that's going to finally fend it off is when the 10-day comes all the way down here and nearly crosses the 50-day or just begins to cross it. And then a big strong rally will come in and fend that off and will power us, possibly into as we get in a little bit closer to Netflix earnings, which aren't next week. Aren't this week coming up that we're about to trade, but the week following that. Okay, hope this video made sense. If you have any questions, just send me a DM and I'll try to answer them. It's the best of my ability. Enjoy the rest of your weekend. Good luck and good trading.